We are recording, and we have Peter Tuchman here today, of course, on Modern Wall Street. Peter, it's just so nice to have like this little glow of happiness, considering all things that are going on right now.
This is the only thing's normal. You and me together on Modern Wall Street.
Okay, so the first thing I have to ask you is, amid all of this craziness, we have the Nasdaq 100 hitting an intraday record today. Peter, do you think that is a fair move for the Nasdaq?
You know what? I don't think that what's happening in the market seems, is it fair or not? You know what? I think the market is, I always joke about it, and people on the floor mess with me. I say the market's doing what it wants to do, right? At this point, there is really no rationale for what the market's doing in the eyes of what's going on around the world, economically, politically, in every way, physically and whatever, right? Normally you would think that we've seen it over the years, markets are affected by headlines about economics, about basic stuff. And what we're seeing, since March 23rd is a rebound, more than 60% of the marketplace and the market itself in the eyes of all this economic data and devastation around the world. And now we've got the pandemic, and now we've got on top of that the devastation of the murder of George Floyd, and my brain is a little bit mush, and what's going on with protests and violence and whatnot. So let's keep them separate, right? For now, you and me talk about the market. It's clear that the Federal Reserve is throwing money at the markets in every possible way they can. They're building their balance sheet. A little bit of analysis that I did since I spoke to you last was that in 2007 and 2008, when we had the financial crisis and there was the bailout and there was the stimulus package and there was the TARP, the U.S. government put $1.8 trillion into the marketplace in all those different forms of stimulus over an 18-month period of time. And that did definitely help us crawl out of that recession, the Great Recession, they call it, and the financial crisis. And we grew through that. And if you look at the charts from 07 in the S&P to now, it's been just from lower left to upper right, beautiful. In this situation, a much shorter period of time, much grander amount of money, the Federal Reserve has pumped $3 trillion with a promise of $5 trillion over a 2 to 3 months period of time into the markets, into their balance sheet. And obviously that is what's contributing to the Dow rebounding into above 26,000, the S&P above 3,000, the Nasdaq 100 breaking records here. That's the only reason it could be. They're not up on earnings. They're not up on guidance. They're not up on anything economic, even though they are if you were to look at any sector, they are the most beneficiaries of this craziness of shelter in place and whatnot.
And Peter, you call it the green tsunami, if you will, right? You did mention that.
Quoting Anthony Scaramucci.
They're buying everything. They're buying everything. They're buying, like I said, I won't be surprised if they start selling this stuff on eBay, because they're gonna know they have nowhere else to put it.
They're gonna be long up the kazoo, 100%.
But if that's the case, Peter, and despite whether it's right or wrong, what's your, I guess, advice? Like, it is what it is at this point.
You know what? Look, if you're in the marketplace, if you're a long-term investor, it's hard to really know what to tell people. Warren Buffett says, don't bet against America. Anthony Scaramucci says it's a green tsunami, not based on fundamentals, that they'll run out of money and that the market will catch up with the economy, right? And that we may retrace back to the March 23rd lows. These are the different narratives. This story is evolving on a daily basis. The market seems to be not engaging the 40 million people who are unemployed. When will their money run out? The attempt at reopening that's been squelched by what's been going on in the protests and the deeply unfortunate murder of George Floyd, right? And what effects that's having, whether we're going to see a respike in the virus, how is the reopening going to happen? When we do reopen, it's going to be 1 out of 4 companies that are going to make their way back to some kind of profitability. Is 25%, are we going to have companies that are going to try and reopen with social distancing, restaurants, theme parks, sports arenas running at a 25% capacity? Is that sustainable in a profitable model? I don't think so. So there are two narratives. The best answer to your question is, I don't know, but I will present you both narratives that It's possible that we just continue, that this money keeps getting pumped into the market, and we keep going on till the election, or until we refocus on the economy. Or the other way around is that the reopening is stalled, that, that companies start really have trouble reopening and becoming profitable with a 25 to 30% capacity run, and that the economy will eventually have its way with the market, and the market will catch up with the economy and will retrace the downside. That's it. That's the best I got.
Well, Peter, honestly, you could toss any answer in a hat at this point, because like I said, I'm pretty surprised that we're up on this measure. And I mean, listen, no matter what is going to happen in the future, like, the stock market is up. So people are going to, I guess, just take it time by time.
If you're a trader, I would suggest take profits and ring the cash register, right? It's a wonderful market, plenty of opportunity to trade. Oh, absolutely. If you're trading, it's a great opportunity to learn how to day trade. Mm-hmm. It's a great opportunity to trade the market with the volatility, right? If you're a long-term investor, it's hard to know what to do. If you haven't done anything else, I would stay in it to win it. I would probably get maybe, take a little off the table and get into some cash. Cash is king at points like this, with an incredible 60+% retracement back from the lows, and then look again. I would rather be buying the market once all the bad news is out at a Dow 30 thou and an S&P 3,500 once all the negativity is out, and take it from there, than to be sitting here trying to, to play with a sharp weapon.
Well, we will take it from there. Peter, thank you so much. Let's reconnect soon. And I have to say, like I said, it's so nice to see your bright, shining face and your coiffed hair. Your beautifully coiffed hair.